Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news inflation is still not beat, and the new tariff wars are messing with when that might happen. First up today, there was another dairy auction, and this one came in weaker than the derivatives market had anticipated. Prices slipped overall by 0.6% in US dollar terms and by 1.5% in New Zealand dollar terms. It was a much lower skim milk powder price that was a surprise undershoot, down 2.5% from the prior event and last week's Pulse event. Cheddar cheese also took a 3.4% tumble, whereas the whole milk powder price was only 0.2% lower than the last event, but it didn't fall as much as the derivatives markets had anticipated. Going the other way, there was a 2.2% rise in the butter price, taking it to almost matching its record high in June 2024. It's a record high in New Zealand dollars. Overall of note today, North Asia, that is China, returned with renewed demand to be the top buyer after largely sitting on the sidelines recently. In the US, the New York Region Factory Survey turned from a negative to a positive expansion in February, a continuation of an improving trend that started in early 2024, but one that has been volatile. But their National Survey of House Builders turned more cautious in February, hurt by tariff talk and the expected resulting inflation. In Canada, they reported January CPI inflation and it came in at 1.9% and pretty much as expected. But the trimmed mean core rate came in at 2.7%, the one the Bank of Canada follows, above the December level of 2.6% and well above the expected 2.5% level. This is going the wrong way for them, and they may now skip the expected March rate cut. We should probably note that German business sentiment rose in February ahead of this weekend's federal elections, on the hope that a new government won't get stuck in coalition paralysis. More broadly, EU business sentiment is rising too. And the Reserve Bank of Australia cut its policy rate by 25 basis points to 4.1%, much as expected by financial markets, citing progress on getting inflation towards its target range. It was their first cut since 2020, but it was a hawkish cut, and post-election there may not be any more until a clear inflation pressure eases, especially those expected from the looming tariff war. Despite that, financial markets are still pricing in at least 2 more rate cuts in 2025. The US Treasury 10-year yield is now at 4.54% and up 5 basis points from this time yesterday. And the price of gold will start today at just under $2,931 an ounce, up $33 from yesterday. And oil prices are up 50 US cents, just over $71.50 a barrel in the US, while the international Brent price is now at $75.50 a barrel. And the Kiwi dollar is now at 57 US cents and down 40 basis points from yesterday. Against the Aussie, we're down 30 basis points at 89.8 Australian cents. Against the euro, we're down 20 basis points at 54.6 euro cents. That all means our trade-weighted index starts today at just over 66.9 and down 30 basis points from this time yesterday. And we have been amongst the largest devaluers over the past 24 hours. And the Bitcoin price starts today at $94,789, down another 0.7% from yesterday. Volatility of the past 24 hours has been modest, at minus 1.1%. Join us at 2 o'clock this afternoon for full coverage of the RBNZ's monetary policy statement. And before that, we'll have the January REINZ results at 9 a.m. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.